Hello everyone, it's Michael from Storehouse Analytics. Welcome to the Storehouse. It's the 16th of April 2015 and this is your weekend review where we look at some trades we've taken in the last week and talk about how we analyze charts. I hope you're all well and trading well. Thank you for being here. Let's start with some housekeeping. First off, thank you to all of you who've watched and liked the last videos. Thank you for sharing them with your groups. Thank you for the comments and the feedback you've given us. Keep them coming. They make us better. Your critique is really helping. So at the end of the video, obviously, I'll give you different ways that you can reach me and how you can get in touch with us. As we always do, let's start with the risk disclaimer. Please pause the video now and read this. I know you're ignoring me right now, but it's important. Please read the video. Remember, trading is risky. You don't want to lose your shirt. Don't trade with money you can't afford to lose. And that's it. It's important. Please read it. Okay, I want to start off by talking to you about my trading week. So after I made the last video last week, I thought this week I'll do something different, something I haven't done in a long time. So I thought I'll do some day trading this week. And so come Monday, I started day trading. Remember, I'm a swing and position trader looking at monthly, weekly, daily charts. The lowest charts I go to are like the 4-hour, the 3-hour. But I wanted to go and look at a different combination now, day trading. And I was rusty. The first half of the week was really rough because it's a very different mindset. So my mindset of a swing position trader was very different to that of a day trader. I know myself. So when I was day trading 4 or 5 years ago, it was a very different mindset and set of skills to that which I have since acquired and mastered, really. So molding myself into a day trader this week, it took me a good 3 to 4 days of the trading week to actually get back into that mindset, which was interesting for me and reminded me of one of my favorite quotes from a book I read every single day, and it's The Art of War by Sun Tzu. And this is the quote I thought I'd share with you. And it's, if you know the enemy and know yourself, you need not fear the result of 100 battles. I know myself. I know the set of skills I've acquired as a position and a swing trader, not the mindset of a day trader. So this week, I didn't do the work that I needed to do mentally before I started taking those day trades. I forgot this quote and I paid for it. So that was a lesson for me. It was really interesting. The last half of the week was a bit better than the beginning, but it's left me with some work to do going forward for the rest of the month. But no matter. It's a lovely lesson to have learned. Okay, so let's get into the charts. That was just my thought for the week, I guess. So okay, let's start quickly as we do. I want to take you through the British pound, which continues to pay out for us. This was one of my swing trades this week, which helped to claw back some of those losses on the day trades. So I'm sure you guys remember this chart that we've talked about. Remember this zone and that we were saying it wasn't fresh and we're in equilibrium because we're testing a non-fresh zone. Some questions had come up about how is this a demand zone when it didn't really remove any supply above. The supply above was here and here, and it didn't really do any of that, which made me think that's really interesting, because what it told me when I was getting asked that question is there's still a lot of work to be done for people to understand some of the nuances, some of the little tweaks and rules of the supply and demand system of trading. So one of the rules is if you have continuation patterns one after another without any peaks, without any troughs, it suggests that the market is becoming quite stretched. So if you think that this November 2007 prices were up here around $2 to £2 to a dollar, and it came all the way down here in 09. This was a big move, obviously. So let's start from the top. Let's look at it. You have a drop, you have a base, you have a drop, you have a base, you have another drop, you have a base, and you have another drop all the way to the bottom. So that's 3 drop base drops in a row. The trend line to encapsulate all of that move would be that. It's a very tricky trend line to draw, but it's the trend line to draw. And as you can see, that trend line, the momentum trend line, was broken, which left this as a demand zone. And if you think about it also, all of this is demand, all of this. So even if you didn't get that rule through the trend line, seeing that this is the origin of all this big rally all the way up to the 2007 highs, from here the 2001 lows, this base took out that low. It's a big base, but it's still a base. So if you were going to draw that base, you would say this zone broke through this base as well with these highs, which would leave you also with this as a demand. So 2 different ways you could have arrived at this being demand, either through the break of the trend line or the penetration of this supply zone, which is what took out this little demand zone and all of these pivot lows. Okay, so that's that. So what I really wanted to show you, and we'll do a lesson on trend lines a little later on today. We have a lot to go through, so let's move on quickly. What I wanted to show you was, remember we've been trading off of this weekly supply zone and taking trades off of that. So if we go to the daily, where we've actually been having our trades, remember we said we had a trend line that was broken, and so we were left with a supply zone which we shorted on the smaller time frames, and then price came down, made a new low, and it was rallying. So at the beginning of the week, I think I put this in the last video, this was the zone that we were looking at, this one right here. Let me just highlight it. This drop, base, drop. Okay, we were saying that we would be looking to short this area because it was nice structurally. It was going along with the trend in the direction we wanted. The issue though with this zone was that we did not have enough of a move away, so we would need to take a confirmation entry, because the move away from that, I think, just barely made a just over a 120. It was close. Let's see what we had here. 1068, and here we have this move, which was 2014, 2025. So 1068 times 2, we were looking for 200136. What did we get? 200125 roughly. So we didn't make a 2-to-1, so we couldn't take set and forgets in that zone. So if we come down to the 4-hour chart, what I noted in that zone, again, this was with me looking for short trades. Let me take this out. This is the that daily zone highlighted on the 4-hour, but I'll take it out for now. So I was looking at these two zones, and I actually posted this in the Trading View chat with some of the guys I was chatting with in the chat room, Trading Institutional Order Flow. I was looking at this zone. I was also looking at this little base below it. So I was looking there, and the last zone I was looking at, which was more the great zone that I really wanted to take, was that one. And this zone, and I'll take it to a daily just so we can orientate ourselves as to where these zones are relative to that daily chart. So here's the daily chart. So these were the two zones inside this base drop that we were looking at, and this one was a bit higher up, just above that wick. And with my experience, I know that this is what we would call a bull trap zone. That's another lesson for another day, but this was the zone I was really interested in. What I didn't want to do though is to have price come into these zones on the 4-hour and then not be there to take the trade. So when price came in, you'll see it had a bit of a reaction, but it never really followed through. What you had was a level on top of a level. This one wouldn't count as a level on top of it because the distance is a bit much, but it was close enough to be worth my interest. So we got stopped out as we shorted inside this zone, the higher one, not the lower one. I always go for the higher one. Those are my rules. Hopefully I'll explain them to you one day, but I always go for the higher level in the level on top of level zones. You could put an entry half here and half there, or a quarter there and 3/4 of your position to sort of scale into it, but I always go for the higher zone usually. So got stopped out there for a small loss, but what I did do was, even though I was entering here to start with, I placed my set and forget order above there. Remember I said we couldn't place a set and forget order inside this zone, but this wasn't inside the zone. This was just outside the bull trap. Big trend up, everyone thinking prices are going to continue. You come into an area where objectively the charts tell us supply exceeds demand. It's a short every time. So first targets, I took them off. I took some off here. I rolled my stops to break even, and as price was falling down, and I was showing these to one of the guys I've started mentoring recently, lovely guy, and I showed him this just as we were in the session yesterday. I was pointing this zone out to him as a zone that we could also be initiating short positions at, and this is where price closed. So if you didn't want to hold it over the weekend, you could have closed out for a small profit. If you're holding it, your stops are above here somewhere, and you're still in that trade. It may work, it may not work. We'll have to wait and see. So that's the British pound. Okay, so I'm sure you've seen something I've written here. Where did I write that? Was that on, I think that was on the daily chart actually. So let's go to the daily. Yes. So this is an exercise we're going to come back to in a minute that I want to take you guys through, drawing trend lines. But I wanted to revisit this chart first. I posted and discussed this chart in the last video, and talking about how the trend is not always your friend, and I just wanted to do a brief update. So price was down here, I think, when we did that video last, and it still hasn't gotten through that level. the trend is down, price has come into a demand zone. You don't want to be shorting in or around this area on a smaller time frame. You don't want to be going down to the 3 hour or the 4 hour or even the daily to be shorting around here. It's too low a probability to work. And I wanted to show you just what is happening on the smaller time frame. So remember, we were saying that these two areas, I've left the drawings in just to discuss it. These two areas were quite very low on the curve, and price has come into it. It came into it during the week, obviously, and it's still, this is 3 days, it's hanging around there. If the supply was really huge in this area, it would probably have fallen way much more. It may still fall, but it's a very painful trade to be in, trying to short here, knowing where price is on the monthly chart. So we're still watching this pair, looking for possible entry opportunities. We still need a few criteria to be fulfilled before we enter that. Okay, so that was just a quick recap on the British pound, Japanese yen. So an exercise in drawing trend lines. Yes, this came up as a question a number of times in my mentoring sessions this week, and it was really interesting that obviously we all come from different trading backgrounds and we all have different ways of drawing trend lines. With the supply and demand methodology, what we want is to be looking to anticipate the next trend. We're not trading trend that has passed. As Sun Tzu says, to be able to hear thunder is not the sign of good hearing. Everyone can hear that. Everyone can see a trend when it's already happened. You're not going to make money like that. You want to be able to anticipate the coming trend so that you can participate in it and be in it well before everyone else, so that when the other people are getting in, they're just helping your trade. Okay, so let's do this. Let's try and draw trend lines. And when you're going to start, this is going to be an exercise that you will want to do until you get used to it. I don't have to do this anymore now because my eyes are so used to it. Okay, so let's start like this. You always want to start from the left, and you want to start when you're doing this exercise. You want to start from a high. You don't want to start from somewhere in the middle. Always start from the highs. So I'm going to use this tool that's in TradingView called the polyline to draw lines on the chart so that you can see it. I'm going to trace the pivot highs to the pivot lows. Remember, we want the most recent high, but there's a reason why I'm not starting with current price. It's to show you the practice you need to put in to get comfortable drawing trend lines using this methodology. Okay, so that's why I'm starting all the way from the left, so that you will know as well that you have to start from the left. So I'm just joining the peaks and the troughs, so that's on a bit higher. Okay, so let's end it there and let's blow it up. So then go now to current price. Let me just bring this into shot. So you go into current price and you say to yourself, where are the two most recent peaks in the case of drawing a downward trend line? This, let me just take these out. We don't need these anymore. This was in a training session I had with someone this week. This is not a peak yet. I deliberately drew it in to make the point because the gentleman I was talking to was also interested in this area and saying, why is that not a peak? This is not a peak because we haven't had it make a lower low. That's why it's not a peak. So with current price here, the two most recent peaks are up here. So your trend line is like so. So if for those of you who want to practice, this is something I would encourage you to do as you train your eyes to get used to identifying trend lines. You want the two most recent peaks if you're drawing a downward momentum trend line, or the two most recent troughs if you're drawing an uptrending momentum line. I hope that makes sense for you. If you have any questions about it, just hit me up. I'll give you the contact details after the video, or at the end of the video. Okay, so that was just a quick lesson I wanted to point out to you. You've done all this, but all this will be useless to you. You were only doing this to be able to identify the two nearest peaks. It's an objective way of doing it, because we could all easily say, right, that's why are we not actually drawing that trend line? Why not that one? Well, the point is, if for you to use this as a pivot, price has to go above this high. It hasn't, so you can't use that. So then will you say that? But then if you use that, are you going to ignore all of this price action? Are you just going to leave it on your chart like it doesn't exist? Of course not. Okay, so this is a schematic I've drawn. I just remembered I had it to make the point, for example, for drawing uptrend lines. It's really self-explanatory and trying to highlight at what point you should be identifying a peak and a trough. So as it says here, this valley only became a valley once this pivot high was taken out right there. Looking at where price is here, we don't have a second valley. We can't use this, we can't call this a valley yet, because this high is not removed yet by the price action, because price action is still here. Now when it happens in schematic B, where the number 2 pivot high is taken out, now we can use point A as a valid valley, and there you have it in point C. I hope that helps. It's just something I've used to teach people in the past how to identify them. Okay, let's go back. So the last thing I wanted to do to end the video, so it's not too long and have you bored out of your head, is to go through a top-down analysis on the US dollar, Canadian dollar, because we've had a significant event happen, I think, this week. And the significant event obviously is the penetration of this low by price. So this was a demand zone that we highlighted that we were looking at, and we had another one just below it, right here. Where is that now? Okay, so right here. So we had two. Price has gone below this one, so we're looking at possibly getting here. I'm just going to take this to a 3-month chart. I know not all of us have 3-monthly charts, but if you do, it's worth looking at them, especially as we've started a new quarter. So you'll see on the 3-monthly chart that this is a rally base rally demand zone, and our zone on that monthly chart is embedded right inside that, which gives it more power, more value. So just going back to the monthly, so there we are. This is the area that we're looking at now, this zone. So we want to be watching to see what happens when price gets here. Okay, what has happened though, the other significant event is if we draw our trend line, now that we know how to draw trend lines, right? If we draw our trend line, what's happened is obviously price has broken the trend line, so we now have that supply zone. So on the monthly chart, which is our curve chart, our range chart, what we've just done is identify the current supply demand curve. That's all we've done. So now where are we? We're getting low. This is not an area to start initiating new long positions as far as the decision matrix goes. If you've been short from here because you took the short from this supply zone, which became the supply zone in control, and you can see let me just take this out to show you. You can see the touch into that zone, and boom. So if you've been short from here, you've been taking the counter trend short, and you're coming down, you really should have been looking to take off some of your profits here and into this zone. And especially now that you've broken that zone, there's no point getting greedy about it. Start looking to exit some of your positions. That's what I would do anyway. I'm not saying you should exit yours, but that's what I would do. And then again, just waiting to see if price will react to that demand zone below. So our curve identified, we're getting low on the curve. We want to be exiting shorts and maybe start looking for long positions. That's it. Now if we go to the weekly chart, this is what you're coming into. People are looking at this and looking at a downtrend. If you're not looking at the monthly, you don't know that you're coming into significant demand zones. There's one, not a great level, but a level, and even more so, there's this one. Now I'm going to change this to a monthly chart to show you where those levels are relative to the monthly zones we're looking at. Look at that. Look at that. So if you go to the 3 monthly one, you see this first zone is just at the beginning of the 3 month based rally zone, and this one is even better positioned with bigger demand lower down. So that's why I say it's not really an area to start initiating. I mean, price could drop all the way down, react. This would have become a supply zone, but this supply zone would be low and score lower on our probability scoring system as a result of that. So it would probably maybe come up, try to go back down, and then rally back up. So we still have a few days and weeks ahead for this to really set up, but as I said, it's lower probability. That's really it. Okay, so that's what I wanted to talk to you all about, and get you thinking about. This is also one of my favorite quotes, which makes the point about that British pound, Japanese yen, and also the US dollar, Canadian dollar that we just looked at. This is Paul Tudor Jones, one of the greatest traders of our generation, and this is what he says, that he's made his best money at market turns, not catching the trend. Trend followers make money, obviously, but I would go with Mr. Jones. He's earned his stripes. So yeah, okay, those are the contact details. Anyone who wants to reach out. People have been asking me a lot about the mentoring system, and what I say to them is we tailor it really for you. We have a chat first, and we talk about what your needs are, what your goals are. I want to know why you want to do this. I don't want you coming into mentoring thinking that I'm going to be pouring into you and suddenly tweak something in your head that will make you understand all of this. I want to know first your motivation behind this. Why do you want to do this, and what commitment levels do you have to take this forward? Because it's hard work. It's a lot of hours, it's a lot of time, How committed are you to it? And in terms of cost and things, again, I'm very, very flexible with these kinds of things. We can talk about that in detail when we discuss. Okay, Michael from Storehouse Analytics signing off. Thank you. Remember, they're protective stop losses. Use them. Bye for now.